We will be talking about DeFi, and we'll get cracking right away. I'd like to ask the panel to briefly introduce yourselves and answer the question, when DeFi is the primary financial system, will we still have Davos and WEF? If we could start with you, Emin, please.
My name is Emin. I'm the CEO and founder of Aave, the company behind the Avalanche ecosystem, and also the company behind a lot of other products in the software stack, including bridges and exchanges, secure, trustworthy exchanges, and so on. And the answer to this question, I think, is fairly straightforward. DeFi will take over from TradFi. If you've ever looked at the internal code stack of any large investment bank, you will know that those bitemporal databases, that mess of code, has to get replaced. So when it does, and we provide an alternative that's so much more elegant, that it's just a matter of time. If we let the text do what they do, it's going to have to happen. And as that happens, we will of course still have Davos. Davos is not going anywhere at all, but it's going to be a very different structure. I think at the moment we're a minority here as a set of cryptocurrency people, and it's going to be a flipped version of events where the WEF is going to be coming to us to ask about how to add into the fabric the kinds of things, the policy changes that they would like to enact into the code that we provide to them.
Thank you. Stani?
Yeah, I definitely think crypto in general will be around, because end of the day it's more about the technology stack that is beneath there. And I think when it comes to decentralized finance, we've been building quite exciting infrastructure. So going back in time and thinking of what, for example, Bitcoin tried to solve in the first place is basically make more global scalable payment infrastructure. And from there, we've seen actual progress to building an actually financial ecosystem that is living on the blockchain. So if you think about today, for example, we still have billions worth of value locked in all these smart contracts across various different protocols. I mean, Aave is one of the protocols that are known as kind of like a blue chips and trusted ones and deployed on multiple networks, including Avalanche network. And I think the key distinction here is that whatever technology you build, you have to build it in a way that it's sound. And when it comes to finance, it has to have economical soundness, technical implementations, but most importantly, the benefits that decentralized finance provides are enormous. So for example, if you look at the whole crypto space and various events for the past year or so, decentralized finance is actually solving some of these issues. For example, it provides you non-custodial access into different financial applications, meaning that you don't have to give the possession of your funds to a third party. The transparency that you get from all DeFi protocols and the whole ecosystem means that you can quantify the risks more accurately. So I think the way to actually get decentralized finance as adoption is also about building just better, faster, stronger finance. And for me, it's decentralized finance. And I think the kind of like a main output is that DeFi is also a global financial system, I would say. So it brings opportunities to everyone participate equally. And I think that's kind of like the big upside when you can bring financial inclusion into the space. So I think that's kind of like the positive outcome that comes from DeFi over the long term.
Thank you. Patrick?
Hi, I'm Patrick. I work for the Algorand Foundation, so another layer one, as you all know, and I have to start off with saying I really appreciate that I was invited here to be here on stage and talking to other blockchains and other friends, I would call it. I mean, of course, at the end of the day, we are competitors, but I think the important thing is that we embrace this dialogue on stage, off stage, behind the doors, because
I hope you're going to disagree as well, because it's always very boring when everyone agrees on a panel. So
okay, might come to
just
this one. So. No, but I think this is more a message to say that we talk about interoperability and these buzzwords, but if we not live up to this promise, I think we definitely will fail. So I think now we have some negative sentiment, because we are still so small. You just join other conferences, other meetups. It's always still the same people. So we're still a really, really small crowd. There are some great people, other protocols in the very same room, and we definitely need to talk to each other. And what is most about this is, at the end of the day, it's for the user, and the user will have the most beneficial outcome if we look what the others are doing. If you stay within your echo chamber and we fight each other, this is already bound to fail. So I think this is the one thing we admittedly often do, saying, okay, these guys are doing great work here and there. That's what we do. We learn from them. We talk to them. I think that's the first thing I want to say, so thanks for having me. Second thing, DeFi. Also coming from the TradFi world, I cannot agree more that I still see that we will make a change, disrupt, you name it, however phrase you will call the transition phase. We will see the DeFi market definitely growing. And I think you can see this, that in the old world and in the new world, we always need the same building blocks, and you can go way back thousands of years. We need some sort of payment instruments. You need some sort of marketplaces. And at the end of the day, you need to work with money, so you need banks. And if you now look at the DeFi space, these were exactly the three on-chain modules which have been developed. You have stable coins, you have DEXs, and you have these lending and borrowing protocols. So we have the basis already set. And of course, to get there, to see more mass adoption, there's still some work to do. And now answering the last question, saying, okay, will Davos still be there? I think this is the thing which we need. This is what I said. We need this dialogue. We need to talk to each other. Might be in a different form in the future. Everything is evolving for sure, but we need these rooms to talk to each other.
Davos Decentralized. Tim?
Hi everybody, I'm Tim Grant. I'm running EMEA at Galaxy. So in slight contrast to everyone else, we're a user, a power user, I'll go ahead and say that, of all the stuff that's being built. We're big proponents of DeFi. But we're a financial services company. We're a regulated financial services company operating globally, offering all the suite of financial services that you would imagine at institutional level. So firstly, it's good to be back in Davos, the extraordinary circus that is Davos. I'd forgotten how bonkers this place is. But it is bonkers, isn't it? Secondly, of course, Davos will still be there, because Davos isn't about technology. Davos is about talking about solving problems. So, you know, it will always be there. If it can survive the pandemic, it can survive DeFi too. So yeah, Davos is always going to be a thing. So what about DeFi? You know, it's because you want a bit of disagreement, I'll do that. Emin, it's been a while since we saw each other. We haven't even shake hands. No, I'm not going to unfortunately, we're all aligned, so there's nothing much you can do about that. But I will say the idea that DeFi becomes the answer, I think that's too much. I think you've got, and you were alluding to it, Patrick, you've got hundreds of years of evolution of financial services. Even what are we calling reinventing? I mean, that's a bit much, isn't it? We're not reinventing. By reinventing feels like we're reinventing the wheel. Like, financial services is financial services. There's no such thing as crypto economics. This is just economics. This is just servicing people's needs. Companies, individuals, governments need to use financial services. That will never go away. What we're doing is we're retooling it. And I think what's exciting is that I think we've reached this very interesting point where a lot of what my fellow panelists have been spending years building has proven to work at scale. And therefore, we've got a very legitimate new opportunity to retool large pieces of financial services and make it faster, better, cheaper. That's where we're going with this. It's going to happen. It's no longer will it happen. It's definitely going to happen. And my view of the world and Galaxy's view of the world tends to be channeling the needs of the largest pools of capital in the world. We work with big sovereign wealth funds, asset managers, hedge funds, global banks. You know, that's the pools of capital that we want to bring into DeFi. And the truth is they're not there yet, and there's lots of good reasons for that not to have quite happened yet, but they want to. The demand side of the equation is very, very clear. There isn't a single big one of those institutions that isn't thinking about this or hasn't deployed teams, and maybe in some cases has deployed capital. So it's just this moment where we're waiting for the big iceberg, like the huge pile of hundreds of trillions of capital to make its way into this new tool set that's being built by everybody here. And it works. And I think stuff like FTX actually demonstrated that it works really well and kind of made a mockery of CeFi in some respects. What I will say is, though, certain elements of CeFi are actually really valuable and you won't get rid of them and you want them. And so there's this glorious collision that's about to happen, which is CeFi hits DeFi, and where that line is, I could care less. I just care that we have a better system as a result, and it will happen soon.
Can I stay with you, Tim? And then you feel free, everyone, let's make this a conversation. And also the audience will come to you. And if you have questions, stick your hand up, be brave, and ask. So, Tim, who are the users of DeFi, do you think? And who will be the users of DeFi?
So it's a very good question, right? So there's this, you can't really call it retail, in my opinion. Like there's a relatively sophisticated crypto native pool of capital that exists today that leverages and uses, that are the power users of this infrastructure that's being built. And just like any constituency of managers of assets, which is really what they are, some of them are winning and some of them are losing, and that's just the way of at managing assets. There's always winners and losers. That, to me, though, is at the moment limited, and it's not a bad thing, right? This is actually a really big pool of capital. As Stani was saying, there are large multi-billion-dollar pools of capital in all of these pieces of the Lego set that we need to build the new financial system. But it's still constrained. It's still constrained because we're at the tip of the iceberg. I think that's the theme. That big pool of institutional capital can't or won't do it yet. And sometimes they can't for regulatory reasons, policy reasons, governance reasons. Sometimes they won't because they don't understand it. And we still have a groundwater fight in terms of having people understand what this stuff does, because people have these crazy ideas of what it is that's rooted in like 2017, which is like 30 years ago in this space. So it's kind of a specialized user base, I think. But it's changing. Where we see the tip of the spear is the really big, sophisticated hedge funds.
Are they the ones who will benefit most as well?
Well, they will, because they'll move quickly and they'll get there's always better returns to be had early in the evolution of an asset class. It always commoditizes with time. So the sooner you get in, the more money you will make, and that's why hedge funds are hedge funds. Why the smart hedge funds are smart. That's why they'll do well.
But then nothing much changes, right?
But you're sort of implying some need to redistribute wealth in some way, which is not really what we're talking about, right? Like the access is there. That's why this crypto native pool has access to it rather openly. It's just limited in its size. It will get bigger, and they'll merge together at some point when the biggest hedge funds will have just as much access and will feel just as just have the right to engage just like anybody else. But I think what you're talking about is pools of capital will always go to those people who do well. So the dynamic of maybe those big crypto native hedge funds become really, really big. That won't go away. I don't think we're fighting that argument.
Let me jump in, because Tim gave, I think, an answer from the vantage point of institutional large sums of capital. I've been in this space for a very, very long time. I'm embarrassed to admit that I was in this in 2002, way before Bitcoin came out. So, and I've seen it evolve, and I can give you an answer from the point of view of the number of heads as opposed to the amount of dollars in this space. That's a very different picture. If I look at the actual, on the ground users of DeFi, what I have seen over the years is that they tend to be white, rich, Western. And there's a simple reason for this. Partly it's because this revolution started in this geography, but partly because the fees were so incredibly high that your regular user with $100 to $300 purse was just kept out of DeFi. You can't pay a $50 fee on Ethereum 1 and still be engaging in any of the exciting DeFi activities. So there was a critical thing that happened, and I want everybody in this room to understand what happened in terms of history. About a few years ago, there came a spate of L1s, Avalanche is one of them, that allowed DeFi and smart contracts to take place with incredibly low fees. And that has changed the picture. So looking forward, I am super hopeful that we can bring in a different wave of users who are not of the first variety, but are coming from a much broader base.
Yeah, I want to also to say about that, because so one thing what is very powerful about decentralized finance is, because of the permissionless nature, it creates a global opportunities. So it means that DeFi protocols, they don't really look into, where are you coming from, what's your financial background, but they actually give you the same equal opportunity to participate. And I think it's something that's very undervalued. Today we see, as we were talking about, that the user base of decentralized finance is very mixed. And it was quite small group of people. I think like going a few years back, the DeFi community was as small as 5,000 people. Now there's hundreds of thousands of users and even more at the current state. And with the lowering of the transaction fees, we actually see more users, smaller deposit amounts, for example, in networks outside of Ethereum, which is incredible because that brings that financial inclusivity as well. So what is interesting here is that you can't really create a very efficient global marketplace effectively without what DeFi provides, which in my opinion is a smart contract-based execution, meaning that every single participant that is using any of the DeFi protocols, they are binded by the same rules. We've seen even in finance and outside of finance that contracts are as good as they are, and if you have to dispute on them, you have to then you have additional cost. But smart contracts, these rules are enforced by nature, and the transparency. So as a participator in these markets and as a user, you are more comfortable to participate when you have the full picture of the financial ecosystem. And the most important thing where we're talking about when DeFi is going to scale a bit more is when we can actually prove that the system and the benefits works. And the benefits will work when we actually can quantify all the risk that is in decentralized finance and price it more accurately. And the reason we can price it more accurately is because when you look at decentralized finance, you really see everything. So you see how much of different kinds of stable coins are minted and supplied in different protocols, what is the trading volumes, what is the liquidity available in various marketplaces. And even in more wider crypto space, for example, what happened with FTX or BlockFi and Celsius, you didn't have that visibility. And you can also argue you don't have the full visibility on what's happening in traditional finance as well. So I think that's a moment when we can actually start quantifying risk more accordingly. Decentralized finance becomes cheaper because you have better visibility there. And then when you have this base infrastructure, you can add additional layers. So for example, today we have stable coins that are pegged into the US dollar, but down the line, you can innovate further, creating stable coins that somehow are more resilient to inflation. And inflation is a big problem today. It's not only about a few countries, developing countries, for example, but inflation is a problem pretty much in every single nation, including Switzerland at this point. So finance is in some way needs innovation and help, transparency as well. And I think that's very important. And one last thing I want to mention about the adoption is that an efficiency that decentralized finance provides as a payment infrastructure. So for example, if you want to today move funds relatively quickly, for example, if you think about situations in Ukraine and do donations, blockchains and decentralized finance stablecoins are a quite good potential for doing that. So I think there's just a lot of layers to be built. There's still 5 billion users online. We're still using pretty much online commerce. The very traditional banking systems and mechanisms, and we have chargebacks and so forth. But there's a lot of things that we can actually build for scale down the line, especially because we have the scalability that some of the new layer ones are providing.
Can I just
please
one more
do.
comment on that? I think, what we have seen in the upcoming of DeFi is that the basic core people using it, or the starting group, are definitely the crypto natives. And I agree that this is what you put nicely, saying, okay, this is still the old economy, the old banking guys, and it's the same group of people. Will there be a reallocation of wealth? I'm also not sure. Will there be the hedge funds who will be up front? I'm 100% sure, because they know how this works for decades, and they will continue on also trying to play on those markets. When I read Reinventing Financial Systems, that's why I started off with this, with the comparison to the old systems. I think we won't reinvent it, agree, but what we can do is by changing some parameters. So as I said, there will be borrowing, there will be lending, there will be transaction fees. But what will happen is if you play around with these parameters, you can definitely change the playground and the rules embedded to it. So, and this is where we think there will change happen. So if you just look at emerging markets, you have, I don't know, sub-Saharan region, 45% or roughly still unbanked. If you go there and say, okay, so this was also our approach at the Algorand Foundation. So our founder, Silvio Micali, said, first of all, we cannot afford another technology to be rolled out and mass adoption not being sustainable. That's why we had this approach already in our core architecture, and provided that the consensus is already really efficient, we really have a minuscule carbon footprint. And even the rest of it is being automatically offset with carbon certificates. So we were the first ones being even carbon negative. But it shouldn't stop here saying, okay, the architecture itself is sustainable and inclusive by bringing really, really low transaction fees. It is our, at least, effort, what we're trying to do to go to these emerging markets and educate them and help them. What we definitely don't want to do is what we did over the last 100 years, go there and tell them what to do. So we tried to bring a foundation there, says, okay, because there are so many hungry people eager to learn, to develop, and that's why we said, okay, we need people there as well on the ground to build these new solutions. And there are, every day, there are new DeFi solutions emerging. And I think this is the most sustainable way in saying to change the game, because the growth and the change has to come from inside. And these emerging markets, be it India and, as I said, Africa as a whole, they're working eagerly with us and we're supporting them. So that's what we can do. And I think there will be definitely a change to see over the next years.
Just one thing I want to add about the kind of like the, whether, the rich will come and, they will like dominate the market is that like, the DeFi protocols, they're actually governed by the communities. So if you look at the Aave protocol, it's actually governed by the Aave DAO. Community members coming together, making proposals, discussing on public discussion boards about what kind of changes, parameter changes to be made to the protocols, and then voting on chain. So interesting here is that, it's very community driven governance. So the users are participating in governing on their own future financial system. And I think that's kind of like one of the most exciting things that is happening beyond like DeFi, the decentralized governance. But also what amazes me is that, if some of these community members aren't happy how things are going within that community, they can always fork the code. So many of these protocols, they're based on open source code, meaning that it's actually public good. So if you really want to make a different kind of a protocol, you can fork it and create a new community and different kinds of risk parameters. And I think that is very valuable going forward, because I think, especially thinking of people at my age and even younger, they want to participate on how finance and financial system works in the future. People tend to think about, especially at my age, that finance shouldn't be only on Wall Street, but it should be everywhere and should be able to participate on how finance should look in the future.
Thank you. So before we move on and discuss things like regulation and all sorts of really, really exciting topics, what's the motivation for using DeFi? There is the opportunity, that's wonderful. What's the motivation?
It's democratization. I mean, I think that's the theme,
if it's just
right?
about hedge funds making money, help me figure this out.
No, I think the problem. So WEF's actually not a bad place to debate this, because the truth is it's a complex web of technology, regulation, governments, corporations, capital formation, and individuals. And when the individuals get split up into a lot of different demographics, right? And that's a horrifically, impossibly complex problem to solve. I'd like to think that really what we're saying here is that this tool set, this spectacular tool set, is going to allow us to find better ways to solve those interactions. But you're not going to stop bad actors. You're not going to stop certain jurisdictions having different views of the world. You're not going to stop the basics of economics and the basics of unit economics. People with large pools of capital will have outsized influence. You will be able to allow better access to people who traditionally couldn't, and that's to be applauded. That's what we all want. No, I don't think anyone would disagree with that. And I think most of us who got into this space, somewhere in our hearts, we're always led by that we're making a difference, that our children and our children's children will just have a more democratic approach to all of this. But the truth is, it's a horrifically complex web of things that, you've got to sort of drill down into one thing you're trying to solve. Otherwise, you're literally trying to boil the ocean in one short answer. And I think we've got to recognise that. But this is a good setting for that. This is what this WEF is supposed to be about, thinking that big picture, you know.
So let me remind everyone that when I was a graduate student in 1999, it cost $150,000 to connect to the New York Stock Exchange and get their latest data and be able to submit transactions into the system that were current. So compare that with any blockchain today, it costs absolutely zero. JPM, Goldman Sachs, and anybody else is on the same flat playing field. I got made fun of recently, not so recently, a few years ago, for spending some time at an Ethereum conference talking to a fellow who was building a revolutionary little DeFi Lego dressed in a penguin suit. So that penguin is getting the exact same terms as all of these financial giants. And that's really what gives me hope, that the moment you come to the table with new systems that democratize the playing field, you open them up, and that then turns out to create enormous innovation, as we saw in the case of the internet. If the internet had been left in the hands of the phone companies, we would still be getting nickeled and dimed to death, and we would still be having all sorts of issues. And instead, an open platform gave us a whole lot of other sub-economies, sub-branches underneath online services. So the same is going to happen to finance.
We have 10 minutes, which is amazing, because I thought we have like half an hour or something. Any questions at this point from the audience?
Yeah. I mean, every one of you talked about mass adoption, all this kind of stuff. So two questions, and only one of you has been talking about education. So there was Patrick mentioned the word education once. So my experience in terms of comes to mass adoption, there are two things to be focused on. Taking out the institutional side. I mean, I'm institutional broker myself, at least on one hand. So education, haven't heard it. I think that's one point, but you can all disagree. And the other one is mass adoption. For me, is always a matter of UX, and no one has touched upon. What I've heard is, I've heard financials and I've heard technicalities. So which I think is great, but I think it's not really like makes it adaptable.
Let me touch upon that, if you will, because I spent maybe 20 years or so being a professor at Cornell. So education is near and dear to my heart. So you're absolutely right. Education is absolutely essential. In the Avalanche ecosystem, we have this new thing called Creates, and we're planning a very big, broad online education system that allows. It's going to be like a if you know the Y Combinator, it's going to be based on the Y Combinator model, except online. So it's a 3-month-long course, if you will, for founders to get on board. But there's the greater cause of getting the word out to the masses, and that's a very, very difficult one. And we need the help of everybody in that sense. I know I do a lot to try to sort of bring down DeFi and concepts down to understandable levels, but we need to work in concert. What was the second issue that you raised?
So the second issue was UX.
Yes,
Oh, UX. Okay, let me also very, very quickly. So we've seen the L1 wars. Everybody knows that the layer ones are in competition with each other. I liken that to operating system wars. We went through that in the 90s. And I think some L1s are now at the point where we can actually handle the needs of the world's valuable assets. We've got the scale, we've got the finality. Avalanche, for example, is the fastest in terms of its time to finality, and it can handle an infinite number of concurrent chains. So we can handle different chains with different governance rules. So that gives us an interesting playing field. But now the time has come to go to the next layer up. And I can easily predict what the next layer up is going to be. It's going to be the UX. And just like we had the browser wars following the OS wars, we're going to have wallet wars. And to answer that, we developed a wallet of our own that is cross layer ones actually. It's agnostic. If you want to check it out, it's called core.app. And that's what allows us to create a seamless experience. No matter where your assets might be, you need a command center to access them. And the notion of wallets is an archaic one. So all those hexadecimal numbers and so forth, they should just disappear. We should be able to interact with these systems as if they're websites.
Thank you. We have another question.
Patrick, this is for you. You just said about sub-Saharan African and 45% people not being banked. I just want to share my experience from being there. More than going to a wider audience, there is an infrastructure lack. Less than 40% people have access to internet.
Mm-hmm.
I have been in Africa for a really long time. I have seen multiple ecosystems trying to expand in there. There is no electricity. There is no internet. It's a completely uncharted market for finance. And I don't want to raise an issue here, but a good example is M-Pesa from Kenya, which went like inside, people could just use a non-smartphone. I just want to see how are we, because we're talking about democratization, it cannot work without government's help. Unless government doesn't go all the way down, unless there is no internet, it's my second time in WEF, we are talking a lot about blockchain. There is only 60% of the world who uses internet at the moment, right? So where is, what is the point of view there? Where is the opportunity to reach out to these uncharted markets?
So the thing is, I only touched DeFi, first of all, because of the 40 minutes, and this we all know.
Come on, Patrick, we're counting on you.
There are much more points which need to be addressed and worked on. So one thing is, of course, again, digital identity also needed. We are working on solutions for that. Privacy topics, also telco. There should then be solutions saying, okay, you have your phone at least, and then what you can do is connect with your Web3, with your digital identity, and set up your new mobile contract within seconds, which again enables you to communicate and so on and so forth. So there are not only the educational and sales going there, and you need to build it from scratch. So we are working, of course, all of us, on various angles to, of course, build on the infrastructure which is still needed.
I want to actually say one thing about which is interesting is that there is some kind of like a thinking sometimes about in general about tech that if you bring entrepreneurs or there's problems to solve, you get people that want to actually take that opportunity and solve it. And you have this mindset of like maybe one way, what governments could do. One idea is that, maybe the governments could stay away and, give kind of like a good rails and space for some of the entrepreneurs to build these opportunities and build infrastructure. But I think personally that to be successful, it requires more of like an ecosystem pull. So it requires obviously the people that are excited to build these solutions and the infrastructure, governments as well. So if you have a buy-in from the government, you're more likely to succeed. And also universities. So I think some of the things that I personally think is very undervalued is university networks. That's where I found, for example, my blockchain during my last studies in University of Helsinki. And also those are the networks where many of the tech can be adopted. And even today, so we have a couple of dozen, even actually more blockchain associations in university level. And they even participate in decentralized governance. So, for example, if you look at the Aave governance, there's few universities actively voting on decisions, parameter changes within the protocol. So I would personally love to see even universities getting more involved. And in Africa, we do have quite good universities across the whole continent. So I think that's quite interesting perspective as well. But I think it's purely a whole ecosystem that everyone has to pull in. First build the first version of the internet, and followed by the second one, and then the Web3 as well.
Thank you so much. We have probably no time whatsoever, but still we'll plow on with one final question. Everyone, we're going to go down the line. Has DeFi done a good job, and has the industry done a good job to make regulators and the wider world understand what DeFi does and why it's necessary? Tim?
So I'll put a finer point on your point, right? Like, so I've said this a few times, I believe it wholeheartedly. that it used to be that the technology was the thing that needed to be proven. And I think the technology and its ability to scale and the number of high quality coders around the world who've engaged in this and are creating a lot of what's represented here, it's beyond reproach. Like that's not the thing that we need to wait and see if it can scale and if it's secure and if it can do all the things we want it to do. And then people would say, it's got to be regulation, like until we have regulation right. And I think we're most of the way there, I think, depending on the jurisdiction. I think at this point, regulation is inevitable, right? That we're going to get there. I think, and this is to your question and your point, the big challenge we still have left is education at a broad global level. And everything we're talking about getting all the different constituencies, I fully agree. Universities need to have a big part to play in this. And has DeFi done a good job? Actually, I think probably it has done a good job. How much faster could we have moved? Do we all need to double down and find the right ways to engage super constructively with policymakers, with regulators, with captains of industry who don't get it? That's what we need to do next. And it's the education burden will get us there. As soon as we get there, I think we'll see a lot more activity.
Have we done a good job technological-wise? I think we both just tried to tell you that we did. I think at least we did. And this is now open source and up, of course, for the users and startups, builders, founders to make use of that. So technological-wise, as I said, the building blocks are here. I think we have done a good job. And on the regulatory aspect, as a European, we were afraid, to be honest, I think I can speak for most of you, that we again over-regulate and we miss again the train for a new technology. Now I think this has changed a little bit, and I think we cannot do this without the regulators. So that's why not only here at WEF, and we are doing this continuously, working with regulators, sitting on the same table and working together on this, because we cannot surpass them, or they cannot make new rule sets for us if they don't know what we want to do and intend to do. So this dialogue is really, really important, and I think this will also continue.
Thank you. Stani?
Well, I do think, like, in overall, when we look kind of like a crypto space, I think DeFi has done quite well in terms of, how as a software and infrastructure it has held up during the past years. So, many of the DeFi protocols that we call blue chip DeFi protocols that are, built for also kind of like a scale and are very conservative as well in their risk assessments. I think they've done pretty well. They're pretty much the only thing that is standing in whole crypto space, very strong and a stronger foundation. So I personally think it's there's still a lot of work to do, because it's still a lot of the risks are new. So for example, where we're getting rid of, let's say, the risk of custody, storing funds at someone else's possession, we're introducing new risks. So for example, we have technical risks like smart contract risks. That is something new to assess, and a bunch of other ones. So I think it's a different kinds of an environment. In terms of the regulation, so I think it's important to partner with regulators, and first and foremost to educate. For example, what decentralized finance is, how it's different from everything else that is out there, and also kind of like try to figure out how much regulation is needed, because in some ways the smart contract itself are rules. So when those rules can actually fail and what to do in that case. There are industries where soft law, self-regulation works quite well. Switzerland is a good example in terms of finance and financial institutions with self-regulations, and I think it's a good path to take as well. So it's just different kinds of layers of regulation, from smart contracts, self-regulation, and then actually government regulation as well. So I think it's important to have some sort of partnership with regulators.
Thank you.
So I'll keep it short. I think that we've done a horrendous job of educating the regulators.
Thank you.
They are wonderful people. They work really, really hard, and all of the ones that I have met are incredibly smart and tech savvy. And yet, it takes a long time to get up to speed and get savvy. I see all sorts of myths repeated. I'll give you some example. I'll give you one example that I'm sure ruffles some feathers. Bitcoin is decentralized. Is it? By what metric? Let's discuss. I don't even know that that's true. And so they come, I keep hearing, oh, Bitcoin is a commodity and I don't know about the rest, for example, is a comment that we heard in the United States. And that's a terrible, terrible comment. It belies a complete failure of our industry to educate some of the top people in the area. So, what should we be doing? Well, there's so much change in this space. There's so many new protocols. Algorand is here, but there are many other Generation 3 Layer 1s. These are fundamentally different. Avalanche with its subnets can do something that many regulators don't even understand could be done, which is have different chains for different legal jurisdictions. This was heretofore impossible. Everybody's in this mindset of a single chain. And now it's different. We can do things such as building a chain for, let's say, the European audience, and a different one for the US audience, and a different one for the Canadian audience. So these are all possible with new technology, and part of the reason why I'm here is to try to educate the regulators who have been very, very kind and have exercised a light touch so far, so that they understand what's coming down the technological pipeline.
Thank you so much. Just as a personal note, I mean, what I think I'd really like for the industry to convince me is that it actually makes things simpler. I'm not fully sold on this point just yet, but that might just be me. But thank you so much for this wonderful panel. Thank you for your participation.